right, December 11th, 7:45 p.m., back in the market again. Recently we had a nice little sell-off here. Price broke down, good little range up here. Actually just exited my short at this level, but as you can see, price hasn't given us too much of a reason to be concerned alongside just yet. This last candle here, we had a nice push up, closed back inside of the range, pretty much consolidation. Went ahead and entered on the highs of these wicks right here. Nice stop above the high and targeting the next level of support, which on my chart happens to be this level down here. So risking roughly 9 or 10 pips, looking for about 28 pips on the downside. Pretty good risk to reward ratio. We do have the 15-minute candle. You can see it lines up in our favor. And then the last hourly bar is a very nice bearish engulfing. So, if the market continues its near-term sentiment, we can expect to hit the target here. There's not too much more going on at the moment. As markets are still, our Asian's open, but until London comes online, things will probably be pretty slow. So we'll just monitor the near-term price action and see how this trade progresses. So in the meantime, while that trade is kind of developing, it's 7:49. So the hourly candle is about to close in about 10 minutes, right? And I have to decide what I want to do about the, ignoring the scalp for now, what do I want to do about this longer-term trend? This longer-term trend trade, which was the first one I took, at the open. So we're kind of seeing a couple of things. The first one is obviously, we had this bearish engulfing candle, and what we would have liked to see is continuation on that. But instead, what we're seeing is, there's a little bit of support here, and price pushed down very cleanly. If we look at a 15, or rather, look at a 5-minute candle, price pushed down very nicely through that level, and as it stands right now, we're sort of just consolidating underneath that. So there's a couple options. The first option is obviously leaving the stop where it is, keeping that risk of 15 pips, and then the other option would be, on the close of this hourly candle, if I feel threatened or I feel that there is some renewed buying interest that's appearing on the chart, what I would probably like to do is move my stop to the high of this candle, right? Because we know that generally when you see these down legs, you never really make a higher high on the candle, right? And this is when there's really strong momentum. Now again, there's always a case where I'm sure I can find one here, but there's always a case where you might make a higher high on the candle and then continue to shoot down. You see it all the time. Right here, here's a good example. Let's say you got in short up here, and you were trailing your stop. Well, you would have been stopped out right here, only to see next 3 hours again. This trade could have been 3 times as profitable. But on the same token, it's a matter of mitigating your risk, right? So how many times does the high get taken out and then it reverses on you? Well, you'll see that over and over again. So it's really a factor of what your trading style is, what you're comfortable with, and going off of that. So in this case, what I think I'm going to do is I will tighten up the stop, and I'll match the stop on my current scalp. Again, the reason for that is because I have enough information on the 5-minute and the 15-minute to suggest that there was or is some supply up at this level, and if price does choose to go above that, then there's going to be a good amount of upside momentum that comes with it. And so at that point, it might just be worth exiting and then readjusting and looking at things again. And of course, if price does decide to break down, I can always get back in. I might pay up a little bit, but at least that way I can reassess. And in the big picture, when you're looking at an hourly time frame or whatever it is, again, there's two sides to the argument. One might be give it some space to move to see what it does, and the other one would be you can in the course of 60 pips it has to drop, you can always get back in. But for me, I like playing it safe. So what I'm going to do is, if this candle closes within the range of the previous candle, I'll move stop tighter. If not, then I will just watch it very closely and look for hints on the near-term price action. So I'm going to pause it again and just wait for this to develop some more and see what happens and which way this market chooses to exit this consolidation period. All right, so it's 7:59, and this hourly candle is about to close. So sticking with the plan, we're going to elect to ratchet our stop down to match the stop of our scalp trade, and that's sitting just above the high of this candle right here. So we're just a few pips above that. So accounting for spread, maybe give it a pip of wiggle room, and if price does manage to break through there, we will be taking a loss on the scalp of -9, and then we'll be booking a tidy little profit of 4 pips on what was initially the longer term play. So just going to pause it again, and I'll be watching the 1 minute pretty closely. Again, at this point, everything is already sort of decided, and there's I'm not going to be moving my stop at this point. Either it's going to break or it's going to go right through and take me out. But I'll watch it just to get a better understanding of what's going on with the price action, and just really improve on the ability to read price action. So I'll be back in a bit, and we'll see how this goes. So what we can see here, it's 8:10 now. What we can see here is on a 1 minute chart, we zoom in, we came up to this level of resistance. We failed to make a new high here, and the price rolled over. Buyers came in and picked it up here, put in a little doji. Price pushed up, little minor 2-bar reversal, and then we just took out the previous high. So right now, price is coming to test this level through here. And remember, our stop is just above that level, so it right now looks like we're gonna run right through, but it's interesting to see how on a lower time frame, what you can do is you can actually see how price is reacting off these minor levels and how it develops coming into this bigger push, right? So right now, little spike here. We're seeing some selling pressure on the near term. Anybody who's playing the range is trying to get in short the stop just above the high, or a lot of times what happens is a lot of banks or big institutions when they want to get into orders or when they want to get into positions, they know that if they try and get in right here, excuse me, what's going to happen is they're going to be pushing the price down against themselves. To fight that, what they might do is they'll probably spike the price above a previous level, and what that does is it simply just triggers all the all the stops and all the buy orders, right? All the buy stop people who like to trade breakouts, and that gives them a lot of demand to sell into, and therefore they can very easily absorb that and then some, and simply just drive the price right down. So that's why I was going to have a little bit of room in between the high and your stop, because that does happen often. And so here you can see maybe this is a little bit more sustained. We're not seeing that quick spike down like we saw here, and that was the initial reason for getting into this trade. What you saw was a little consolidation form here, and then you saw a very big spike through, and the close back below. Pretty much what we're suggesting could happen here. Obviously, it doesn't look like that's the case so far. But that's the idea of it. You have a big push through, a spike back down, and then you break down to the other side. So in this case, if that was to happen, we would have to see a pretty big push down on the back of this break higher. So far, what we're seeing is just the retest of prior resistance, right? This was resistance, should now serve as support. And if we retest it and we can hold it, then buyers will use that as trampoline to push prices higher. We can also drop in this trend line. This is going to be a reference for the buyers, and any breach of this level will definitely be an issue for the buy side. Anyways, price looks to be pretty slow at the moment. I'm going to go ahead and pause the video again, and then pick it back up. We'll make you see something happen. All right, so I'm back. 8:18 now. Some interesting price action here. You saw, we survived this initial push here, and then you can see price actually rolled over pretty hard, and then right after that, just this push, and we're seeing some continued momentum as it stands right now. So, this just goes to show anything can happen. Just be ready, manage your risk accordingly, and if the market decides to take you out, then that's okay. So, anyways, I think that'll be it for the night. First trade was that longer term trade. Exited that one for about +4, +5. Took that scalp, made 20, and then lost 9 on the second scalp. So, what does that give us? What was the first one was so about like 16 or so for the day, and that's a pretty good start. Anyways, thanks for watching, and talk soon.